Today's episode is brought to you by Mazars.
SoundCartel.
From SoundCartel, I'm Nicole Goodman, and this is Business Essentials Daily. One key challenge most businesses face is sourcing the necessary capital to grow. But are there solutions that you might be overlooking? Business mentor John Natale uncovers some of the options. But first, he explains to Chris Ashmore three main reasons why businesses have trouble finding the necessary capital.
One is that most small businesses or emerging businesses don't have the security required by the lending institutions. Most of them don't have a really good plan, so they can't really articulate exactly what their business does and what it needs and what it plans to do with the capital once it gets that money. And I think the other big factor is time. Small business owners are busy, and the process of actually applying for capital and putting all the steps in place can be quite time-consuming. And I think that's the other big deterrent for small business owners.
Well, it's true for all kinds of business, all sizes of business, but it's particularly true for small businesses that don't have the resources for this.
I think that's exactly right. So small businesses, we know the value of small business in the economy. They employ 7 million Australians, or around 70% of the employment is taken up by small business. They're certainly in amongst the most innovative businesses in our economy. So small business is busy, and they really don't have the time or the focus to do this. And I think when you're starting out, obviously, if you're in the early stages of business, you are pretty much scrambling a lot of the time. You're looking to engage your market, you're looking to sell, you're looking to grow your brand, and having the time to focus on finance and capital and cash flow, albeit a very important thing to be focusing on in your business, I think it often gets left behind. And so if a business can put those plans in place and have a very clear strategy for how they will bring their capital into the business, what they'll then do with that capital, how it'll be applied and how they'll generate a return for that capital, that's a really important process for them to get through.
Well, if we look at the detail, John, what can business owners do to be prepared?
I think the first thing is to understand your objective in bringing capital into the business. We speak with many small businesses, and it seems to be a trend, I think, that many small businesses start with the objective of bringing on an investor quite early. And whilst I can see the rationale for that, I think there's also a downside to that. You've got to be careful not to give away, too much of the business too early and really get involved, really have someone come in. And I guess it plays into the hands of that sort of Shark Tank opportunistic investment strategy, for the investors. If they can get in early in the business and really invest at a very low value and then have the business grow very quickly, that's ideal from an investor scenario. It may not be the ideal outcome for the business owner, though. So being really clear on your strategy, understanding why you want the capital, when you want the capital, what the timing of that is, and how that capital will be applied, I think is really important. Being really, really clear on your value proposition as a business. Okay, so understanding what it is that you're offering as a business and really being clear on what you bring to the table for the investors and for your market. I think that's really important as well. And in terms of prep work, I think really having a solid business plan and understanding your numbers is critical. Many of the small businesses we see really don't have a good grasp of, what do my numbers look like for the next 12 months or the next couple of years, and how do I plan to influence that and grow the business and paint a much, much better picture, a much more attractive picture for potential investors.
Well, getting money can always be difficult for small business owners. What are some of the funding options available?
Yeah, okay. Well, if we look at the traditional funding models, there are a few. The first one is save, so you can put your money aside and try and build up a bit of a capital base. That has some upsides. It's a lot less risky as a strategy. It's also one of the slowest ways to gather capital, so you may get left behind in the race, from that point of view. So that's the first thing. I mean, look, if you look at the traditional ways that people have funded businesses, you could hit up a family member. You could ask your family for support or some friends for support. I guess the most common way is bank debt, so going to the banks and actually asking for a loan of some description, a business loan. And these are all still acceptable ways to grow your business, acceptable ways to bring money into your business. I think one of the big barriers to starting a business and owning a business and growing a business has always been the dollars. But I think there are more options available now for business owners than there have ever been in terms of the way that they finance things. So you could look at a couple of areas. So there are numerous grants available for businesses, and I think it's well worthwhile investing in some time to explore that area and understand what grants might be available for you as you go through the different stages of business. So government grants, entrepreneur entrepreneurs programs, industry skills type funds, those sorts of things, innovation and R&D grants. There are people who specialise in finding those and getting you access to those in your business, and that's really important. One of the big ones, of course, has been around manufacturing and export grants. So those areas are certainly worth looking at. The other one that's becoming really popular is crowdfunding, and this is a really interesting area. So this is where you effectively put your business opportunity out to the market and have them invest in your business. It can be a really effective way to raise some initial capital. Again, like most strategies, it has pros and cons. I think it's a great way to test the market and for businesses to understand whether there'll be good take-up with their product or service. If you're looking at it from the point of view of bringing investors in, though, I think you have to be careful you don't end up with 100,000 mum and dad investors in your business, and that really stifles your decision-making to a large degree. So crowdfunding sites like Possible and Kickstarter have launched some really exciting businesses in the last few years, and I think that's going to continue to be a really exciting and innovative way for people to find dollars. But I'd rather see it as a way for them to generate initial cash flow as opposed to equity, if that makes sense, in the business. A couple of other ones just to touch on. Private equity investors. Australia has a fairly active private equity area, and private investors and high net worth individuals are also worth looking at. A very competitive area. Getting access to these people is not easy, often very time consuming. And I think for small business, it's a fairly tricky path for them to follow, particularly given that most small businesses aren't really strong at articulating what it is that the opportunity is for these guys. They kind of go in search of money without having a very clear view of what it is that they're actually offering and what's in it for the investor. And then, of course, one of the really important questions to ask, I think, is do you actually need the capital at all? So oftentimes people say, well, look, we need to go and raise finance, and you need to ask yourself why that's the case. We know that if you can generate good cash flow and profitability, there are many businesses who have basically bootstrapped their way to success. And I think the timing is really important. So if you're bringing someone in early, you're going to give away a significant chunk of the business for probably not a lot of cash at that point. And if you can hang on for a couple of years and build real asset value in your business and have a much more valuable proposition, be much more organised in terms of your finance options, I think you'll do a better deal, perhaps down the track a little bit. So I think the important question to ask is, do we need the capital right now? Why do we need it? What's our strategy? And what's the outcome we're trying to achieve?
That was business mentor John Natale. This episode of Business Essentials Daily is produced by the team at SoundCartel. Thanks for listening. I'm Nicole Goodman. We'll bring you more Be Daily tomorrow. Follow @BE Daily Podcast across social media and head to bedaily.com.au for more from the Business Essentials Daily podcast. SoundCartel. This episode was brought to you by Mazars. To find out more, visit mazars.com.au. That's mazars.com.au.